So Singapore Exchange, or SGX Group, held its 24th annual general meeting on 5th October. As a shareholder at SGX myself, I decided to attend the AGM to learn more about the growth plans and initiatives that SGX management has to continue growing SGX in the next few years to come. But before looking at takeaways from the AGM, let me just go through SGX's financial performance over the past 5 years. In terms of revenue, it has grown from $909.8 million in FY 2019 to $1.2 billion in FY 2023, achieving a compounded annual growth rate of 7%. Operating profit has also grown from $461 million in FY 2019 to $589.5 million in FY 2023, achieving a compounded annual growth rate of 6.3%. Net profit grew from $391.1 million in FY 2019 to $570.6 million in FY 2023, achieving a compounded annual growth rate of 9.9%. In terms of returns to shareholders, dividends paid out rose from 30 cents in FY 2019 to 32.5 cents in FY 2023, achieving a compounded annual growth rate of 2%. However, the return on equity fell from 35.9% in FY 2019 to 33.5% in FY 2023, achieving a negative compounded annual growth rate of 1.6%. So, with SGX financial performance covered, I'll now move on to my 5 takeaways from the AGM and my personal thoughts about them. So the first takeaway was management clarifications on SGX FY 2023 writebacks. So in FY 2023, SGX made 2 writebacks with regards to the acquisition for Scientific Beta and MaxxTrader. If you do not know what a writeback is, it's basically a clawback of funds which were originally set aside for future expenses as they are no longer needed. It is a non-cash line item and thus does not fundamentally impact the company's cash. For SGX, the 2 writeback amounts were $23.3 million for Scientific Beta and $14.9 million for MaxxTrader. Management informed that the writeback for Scientific Beta, or SP for short, was due to weaker than expected operational performance. This led to SGX not needing to acquire the remainder 7% stake in SB for the originally agreed acquisition price. Management also informed that the weaker performance in SB was due to a market pivot from value and factor stocks to technology-driven and cap-weighted stocks. For MaxxTrader, or MT for short, the writeback was due to MT's operational performance not hitting the outperformance threshold. Hence, SGX did not pay out the originally agreed fee for outperformance. Management also added that the performance of MT was in line with the baseline expectation. All in all, in my opinion, the writebacks are not a huge cause of concern. Nevertheless, it will still be prudent to monitor SGX's future impairment losses as it could shed some light on the subsidiary's performance. Moving on to the second takeaway was SGX's network and portfolio growth strategy. Unsurprisingly, during the AGM, there were questions about SGX's growth strategy and plans for the next few years. For this, management informed that SGX's growth plans can be summarized into having a network and portfolio effect for its products and offerings. The network effect means that SGX will continue working with partners such as asset managers or other stock market exchange to achieve mutually beneficial outcomes. We have seen some examples of such partnerships with the recent listing of BlackRock's Climate Action ETF and the launch of Thai SDRs back in May this year. Management also informed that they will be exploring more SDR options, especially in the ASEAN region, in the next few years. Besides working with partners, the network effect is also centered around more coverage for SGX's main products such as currency and commodities derivatives. Since more coverage will lead to a larger addressable market for potential clients, which thus will result in more potential revenue for SGX. With regards to the portfolio effect of SGX's growth strategy, it is centered around building an ecosystem of products and offerings for clients to cross-trade and achieve cost efficiency. SGX CEO put forward an example of how if an asset manager or bank were to trade over-the-counter currency derivatives at SGX, they would be offered the opportunity to also trade commodities or other equities derivatives at a discounted and more cost-efficient price. He explained that this is appealing to clients as the cost of capital in the current macroeconomic environment has gone up, and thus clients will definitely prioritize cost efficiency in their trading. Besides over-the-counter currency derivatives, management also highlighted plans to build a bonds future business and later move on to offering over-the-counter bond offerings too. With this growth strategy, management informed that they are looking at a high single-digit revenue growth with low single-digit increase in expenses, resulting in a mid-single-digit dividend growth for the next few years. Personally, while I am quietly confident that SGX growth strategy will be successful for its FX and commodities products, I am not so sure about the equity side of things. This is because, regardless of how many listings or partnerships an exchange might have, it will still boil down to market liquidity and trading volume at the end of the day. And for that, judging from the equities performance for SGX over the past few years, I am not sure that enough can be generated in the medium to long term for such partnerships to continue. Furthermore, working with other stock exchanges might also pose a slight risk to SGX, as the other exchange might cut off SGX if they find that SGX is cannibalizing their operations. I guess to see if SGX growth strategy will be a success or failure, investors will have to give it time for it to play out and judge it again after a few years. Moving on to the third takeaway will be the potential growth drivers for SGX. As an extension to SGX growth strategy, the management also highlighted some growth drivers for SGX in the next few years. One of them was the transition to net zero for most countries around the world. This could lead to increased trading and interest for SGX carbon credit and battery metals derivatives. Management also informed that they are looking into listing a suite of climate-linked indices in the near future. To build on their success with currency derivatives so far, management informed that they have expanded their FX futures offerings to include both the Korean won and Taiwan dollars. This should result in more volume for derivatives trading. Management also highlighted how the increased prevalence of Asia in the world economy, particularly China and India, could lead to unique opportunities for SGX in the coming years. The recent GIFT Connect with the National Stock Exchange and the upcoming link with the Shanghai Stock Exchange were some of the examples highlighted. The rise of Southeast Asia unicorns was also another avenue for potential growth opportunities. Personally for me, I am most excited about the climate and sustainability linked opportunities, as I feel that they are still currently in their early growth stage. While Asia's increased prevalence in the world economy is not something to be ignored, I feel that it will bring limited upside to SGX earnings. This is because for equity listings, SGX will definitely lose out to bigger exchanges such as the Hong Kong Exchange due to market liquidity and trading volume. Furthermore, the ascent of China and India as economic powers is not a recent occurrence, and it has happened over the past few years. However, this has not resulted in a huge surge in SGX earnings for its equity operating segment. This then leads nicely to the next section about how SGX itself is dealing with competition. There were a few questions raised to the AGM about how SGX is able to compete with bigger exchanges such as the Hong Kong Stock Exchange. While management did not exactly answer the question for obvious reasons, they stated that competition for SGX is not new and that they believe their growth strategy will bode well for SGX in the next few years. For this, I tend to agree with SGX management, and here's why. While SGX may be on the losing end when it comes to equity listings, it has proven itself capable of crafting out its own niche over the past few years. Take for example iron ore derivatives trading. SGX has managed to cement itself as one of two major destinations for the trading of iron ore derivatives globally. And the current CEO at the helm, I think he's able to drive SGX forward given his success in pivoting and growing the derivatives segment since his tenure in 2015. So moving on to the last takeaway is what SGX is doing to better protect retail investors. These questions were mainly a result of the winding up of Eagle Hospitality Trust, or otherwise known as EHT, in 2021. If you're unaware of what happened with EHT, long story short, it was a US hospitality REIT which IPO'd in 2019 and subsequently declared bankruptcy in 2021. There were also other notable cases such as Hyflux and Noble Group, which resulted in significant losses to retail investors. In response to the questions, the head of SGX Redco informed that since 2021, SGX has strengthened its listing decisions for REITs and business trusts. He also mentioned how SGX Redco has a dedicated enforcement team now, which has led to more positive enforcement outcomes. To be honest, the response did not shed much light on what SGX is planning to do to better protect retail investors. But I think as retail investors, we need to do our own research, especially when it comes to new IPOs. If through our research there are certain dubious signs or unclear information, it is best to avoid the company and wait for it to mature on the market for 1 or 2 years. Now, I'm not saying that SGX has no role to play in screening companies before listing them on the Singapore market. However, at the end of the day, no one cares for our money more than ourselves. So yeah, those are my 5 key takeaways from SGX AGM. Personally, I'll continue to stay invested in SGX and keenly watch how its growth plans pan out. If you're a shareholder of SGX, let me know your thoughts about the company in the comments below. And if you found this video useful, I would really appreciate it if you hit that like button below and subscribe to my channel if you've not done so. With that, I will see you all in the next video. Goodbye.